Here's your host and broker-owner of the Dan Gemus Real Estate Team, Dan Gemus.
Welcome to the show, everyone. This hour we talk all about mortgages. We'll talk about the process of obtaining a mortgage. We'll cover refinancing, interest rates, and all kinds of fun stuff. In studio with me today, we have Deenie Stubbing, a mortgage broker and personal friend of mine from Mortgage Intelligence. Good morning, Deenie.
Good morning, Dan.
Welcome to the show.
Thank you.
It's always fun to get guests in here live with me on Sunday mornings. So I'm happy you came in.
Myself as well.
Are you normally a morning person?
Not on Sundays.
No. Well, today is a different day.
Yeah.
So we are going to talk all about mortgages today. If anybody has any questions, you can call us live in the studio, 519-792-2559. That's 519-792-CKLW. You can email them my way at dan@dangemus.com, and you can go to Facebook as well, okay? So, and might I also add, we're going to mention Deenie's contact info throughout the show multiple times. It's also on our website in the People We Trust section, okay? So it's all there. So tell us about yourself, Deenie. You've been in business quite a while. I've known you for many years.
Yes, well, I've been in the mortgage industry in total about 25 years, possibly even 26 now.
And you're only 29 years old.
Yeah, exactly.
That's fantastic.
I was wondering if you'd catch that. And I've been mortgage brokering for about 15 years.
Okay.
Yep.
So a long time.
A long time.
The industry has changed quite a bit since then, hasn't it?
It's changed so much, especially in the last 3 years.
What are you noticing as some of the largest changes?
The largest changes, and I'm sure you're noticing them as well, is just all the new guidelines that the government's imposed on all the banks and lenders. It's making it pretty tough compared to what we used to be able to do.
So give folks an idea as to what exactly has changed.
They've changed for quite a few things. One of the things is the amortization we're allowed to use, which sets someone's payment to be higher or lower. So that's changed. Guidelines for the applicants have changed, requiring minimum credit scores, type of credit on the bureau, down payments. We had 0% down for quite a while, which was great for the market. That's gone now. Income that we're allowed to use. Documentation that we're required to get. That's pretty hefty now. People get pretty annoyed with that.
Yeah, it's one of those things
like
where
yourself.
I it is, it's a lot of extra hoops, but at the end of the day, the way I look at it is it's probably for the better.
Well, it is
for the market in general.
It's to protect the economy, right? Because the money that the banks are using is, part of our entire economy.
Exactly. And
plus huge fraud protection. There's more and more of that every day.
Yes, there is. So you're a mortgage broker. Why don't you give folks out there an idea, what's the difference between a broker and the bank direct?
So being a broker, we have access to the majority of the banks, mortgage companies, credit unions in Canada.
Yeah.
So if you go to a bank, you're going to get their mortgage, their advice based on just their product. If you come to someone like myself, we have access to most of the mortgage companies and banks in the country.
Which is huge. So you've got dozens of lenders that you can work with.
Yeah, like we typically say we have more than 50. Of course, there's a smaller pool that we use that we prefer, right? But a lot of lenders.
Can you tell us about your approval process? So when someone is getting ready to, house shop, first thing we'll do is we'll send them to a mortgage person. So give us that process. What do you go through with them?
Well, the first thing you always want to do is have someone become pre-approved.
Yes.
Just to make sure, number one, is their credit satisfactory. You don't want to find out at the last minute there's a problem, something that might take months to fix.
Yeah.
And also to see what they qualify for and what they're comfortable with.
Which is huge. What kind of documents necessarily are necessary for a buyer to purchase?
Well, when you buy a home, you need, and it depends on type of job they have.
Yeah.
But in general, we have their basic application, which is going to be all their personal information and their credit. Then we need a letter of employment, a pay stub. Some cases will need bank statements to confirm that their pays are actually going in there. The last 1 or 2 years, income taxes need to be done as well. So we'll need that. And then one of the larger checks is to verify the source of their down payment.
Yes. And so, we have I have so many questions. I have 4 pages of questions. We're still on question number 3. But just to skip ahead a little bit, down payments.
Yes.
And you say source of down payments. So let's talk about that for a couple seconds.
The general rule is that we have to show that the customer have saved their own down payment. So there are exceptions to that rule, but in general, we have to show that a 90-day history on where this money is coming from. So if it's someone's bank account they've saved, we have to show 3 months history in their bank account or their RSPs. There are some cases where people can borrow their down payment if they qualify to carry that extra payment. And then we have the nice fallback as where we can allow someone to have a gift down payment from an immediate family member.
Yeah.
But now some of the new guidelines are having us the need to prove where the gift is coming from, not just a letter saying it's from my parents. We have to prove the parents have the money as well now in some cases.
Wow.
So that's, one of the changes that we've been seeing.
You wonder why. If mom and dad want to give me the money, who cares where they got it
Well,
from?
you know what?
They're
It's the Anti-Money Laundering Act.
Oh.
So there's so many. You don't see a lot of this in Windsor, but there's so much fraud going on and people using mortgages and homes to launder their money. So they need to make sure that the money is legitimate.
I'm writing myself a note because I have a question for you off the air. You mentioned credit scores.
Yes.
What are lenders looking for?
Well,
now typically
that depends on a lot of different factors. Number one being how much money they're putting down. So in general, a new guideline is someone's credit score to get a regular mortgage, which would mean from a regular bank and a good rate. You must be a minimum of 600. But with that said, someone's 5% down. There's not a lot of. It's pretty tough to get it done at 600.
Yeah.
You might need it to be 630, 640. So the more money you have down, if you have 10% down, then maybe we can get closer to the lower range.
Okay. Is there a magic number that once you see someone's credit score, you're like, okay, we're fine?
Not. There used to be when the systems were automatic.
Okay. Can you hear that in the background,
phone.
Kyle? Can you hear that? That is, this is creepy. I just got. Excuse me a sec. Keep talking, Dave.
So
I have to explain.
No,
so
go ahead.
I just got my new iPhone, and that was Siri jumping in the background. I don't know
she's
why.
answering she's answering your question.
Typically, if I say, "Hey Siri," she jumps in.
Yeah.
But that's funny.
She thought you were asking her. Oh, that's
We were
funny.
talking about what credit scores.
Scores.
Is there a magic number that people
Sometimes there's not. There's actually not, because for an example, I had a customer the other day. Their credit score came up. It was 720. So it's the first thing I see, and I think, oh great, this is going to be an easy deal. Well, they've been on the credit bureau for 2 months. That's it.
Oh.
So you can't just assume the number is great, because there's also criteria where the banks want to see that you've been on the credit bureau at least 12 months with 2 different accounts that you've had revolving. So you can't just say I have a $500 credit card available to me. You have a 700 score, but that's not sufficient to say that you're credit worthy. They want to see that you've been using a bit more credit for longer.
Picky.
So picky.
With all the various lenders you have access to, and you mentioned you have access to over 50, and you also mentioned that you tend to stick with a select group.
Right.
Is there times when you have a client, whether it be a buyer or refinance, and you just think to yourself, you know what, a certain lender would not work for them for a certain reason, whether it be terms or...
Yeah, every day.
It's always something.
Yeah, it's every day, especially nowadays. It's a little tougher to get people approved. But with all the lenders, there's say 6 or 7 that we use all the time. But there's quite a few times in a week where you have to use the one maybe you're only going to use once or twice a year, because it might be something with the property, say. Like the property could be really low value. A lot of lenders don't want to lend unless the house is, for example, at least $100,000.
Wow,
so say
really?
you had one, you've seen them come through at $60,000. Now my list of 50 banks went down to maybe 3 that would do that.
Really?
Yeah. And then if you add something else in there where maybe their credit score is lower, or they have a commission job, say, you get different factors in there that you're really putting your pool down.
And really, in Windsor, Essex, we have a lot of homes under $100,000.
We do.
It's not uncommon.
And there's not a fair amount, but there's some lenders in our province that will not lend in Windsor because our property values are on the lower range.
Really?
They have a minimum mortgage amount, and they want to stick to it.
Wow.
Yeah.
Isn't that interesting? What costs typically for a buyer are associated with mortgages?
With purchasing a home?
With purchase, yeah.
With purchasing, well, there's 2 different scenarios. So the first would be first-time home buyers.
Mm-hmm.
So the first-time home buyers do not have to pay land transfer tax. And that's been a rule for
huge.
quite a long time.
Yep.
I'm assuming that's going to stay around for a bit. So legal fees, which
we have an
would,
election on Monday, D.
that plug in there, right?
Yeah.
So it's in for a few more days.
Yes.
The first-time home buyer, the lawyer's base fee plus the general disbursements you see, which would be title insurance and all the searches the lawyers do, that's about $1,500. Then there's a few taxes on top. So I tell my first-time home buyers, make sure you have at least $2,000 available.
Yeah.
Now, if we have someone buying a second, home, or it's not their first, we have to add land transfer tax, which is based on the purchase price. So, that can put somebody up $700. It can put them up $3,000 more.
Yeah, could be a big difference.
Yeah.
Could be a big difference.
And the land transfer tax, too, I wanted to mention, because it's quite a misconception, because sometimes you do see a first-time home buyer that are buying in the higher end. The land transfer rebate is only up to $2,000.
Oh.
So when you tell a first-time home buyer you don't have to pay, and then they say at the lawyers, I had to pay $900, because say it was $2,900. So $2,000 is the maximum that they get rebated.
Interesting. Okay. Bankruptcy. If someone's gone through a bankruptcy, we often have people call and say, Dan, I want to buy a house, but I've gone bankrupt a few years back. Yeah. What are the rules?
Well, that's a good question, because when someone's going through a bankruptcy, I find, in all my experience, that the bankruptcy trustee, they're not completely forthcoming with the rules. They say, don't worry, you can get a mortgage again after 2 years. They don't tell them all the things they need to go through to get a mortgage. So if you've had one bankruptcy, you can get a mortgage again once your bankruptcy has been discharged for 2 full years. But during that 2 years, we also need to see a new full year of reestablished credit with at least 2 accounts. So that can be tough to get someone to give you your first piece of credit.
No kidding.
So, I have a little set of rules of things that I'll advise people to do if you went bankrupt. I'll give them a schedule. And the next year, I want you to do this. Certain cards that are easier to get than others. If we have someone that's gone bankrupt a second time, which we're seeing more now, those bankruptcies pop back up on your credit bureau and they stay there for 14 years. You're not getting a mortgage.
Wow.
Yeah.
Very interesting.
And the key thing on having a bankruptcy, if you had a house in your bankruptcy, those rules don't apply. It's almost impossible to get a mortgage, even if you've had one bankruptcy, if you let a house go in it.
Wow.
Yeah. For at least until that bankruptcy disappears off your credit bureau, 6 years.
Could probably do a whole show just on that, couldn't we?
You could. Yeah.
Okay. So let's take a quick break here. When we get back, we'll talk more about rates. And amortizations, and I've got so much more we want to talk to you about mortgage terms and transferring a mortgage and refinancing. So we're going to talk about all that right here on the Dan Gemus Real Estate Show. If you have any questions you want to ask Deenie live on the air, 519-792-2559. It's 519-792-CKLW. Lots more to come right here on the Dan Gemus Real Estate Show. Thanks for joining us this morning. In studio with me is Deenie Stubbing, mortgage broker with Mortgage Intelligence. We've been talking about mortgages, and before we go to break at the bottom of the hour, Deanie, let's talk about purchase plus improvements a little bit. It's something that you're seeing quite a bit as of late.
Yeah, purchase plus improvements are a great idea. A lot of people don't know about them. So when you're buying a house, if there's anything that the house may need with work, say, example, it needs a new roof or a few windows, you have a buyer that's going to shy away from that house, you can suggest to them, do a purchase plus improvement. So we're allowed to add up to 20% of the purchase price to the purchase. 20?
I thought it was 10.
Well, CMHC is 10, but we have Genworth, the alternative insurer, who is 20. So they allow up to 20% to a maximum of $40,000.
Okay.
So assuming that customer can get approved, there's no reason why they couldn't go to Genworth. We can go up to 20. So the way it would work, let's say we'll make the numbers basic and easy. If you had a $100,000 house, we can add up to $20,000 in quotes. So if you added a full, for our sake, that purchase price becomes $120,000.
Okay.
So then your down payment, if it's 5% down, is 5% of the $120,000.
Yeah.
When the house closes, you get the money to close the house, but then they have the lawyer hold that extra $20,000 until all the work is done. So ahead of time, your customer would provide us with quotes. Say they give us a quote for roof and windows, it's $20,000. Yeah. They have to get that work done as soon as possible. As soon as it's all done, then we release the money.
Obviously, the lender doesn't want to give the money without the work being done.
That's right. And they do a check initially to make sure that the work's being done improves the house's value. So most stuff does. What wouldn't work, say if they were doing landscaping or putting in a pool.
Yeah,
it has
to add value to the property.
Yes.
Yeah, of course.
Yeah.
Let's talk a little bit. we've got 90 seconds. Let's talk about, not much time, but let's talk about CMHC and insurance on a home.
Yes. So if you have less than 20% down, by Canadian law, your mortgage has to be insured by CMHC or Genworth or Canada Guarantee. So we have 3 insurers in Canada. You pay a premium for that based on your down payment. So during the approval process, the bank approves your mortgage, then CMHC has the final say. They approve the customer and the property as well.
Yes. And we often have to remind our clients because, oh no, the bank says I'm fine. Well, wait, they have to check with CMHC first.
That's right. Because a pre-approval is the bank saying we'll do it.
Yes.
Assuming CMHC does it.
Yes.
So you have to know enough when you're looking at a deal. Will CMHC approve this deal?
And there's times when they don't, isn't there?
Yeah. Not often, but it does happen.
Yeah.
Yeah.
Okay. When we come back, we're going to get back into rates because rates are, I've been saying for years, and you've been saying for years, they're not going to get any lower.
No.
3.5%. This is it. Hurry up. Lock in for 40 years.
Right. And here we are.
And here we are.
Yeah.
2.59, 2.69.
Yeah.
It's just absolutely crazy. So we come back. Let's talk about that. Let's talk about, refinancing, which is huge right now. And lots more. Okay. Yep. So I'm here with Deenie Stubbing from Mortgage Intelligence in studio live. And we have lots more to come right here on the Dan Gemus Real Estate Show.
Owner of the Dan Gemus Real Estate Team, Dan Gemus.
In studio with me today is Deenie Stubbing, mortgage broker with Mortgage Intelligence. We're talking all about mortgages. If you have any questions, you can reach us in studio, 519-792-CKLW. That's 519-792-2559. You can also find all the audio from every show we do, as well as video. We have cameras in the studio. You can find them all on our website, dangemus.com. Our website's been launched a week or 2 weeks now. It's an awesome website and lots of material, and it's nice and easy to find everything there. So, Dee, let's talk about rates. So, like we said before the break, you and I have been talking for years about how, the rates aren't going to go any lower. So hurry up and lock in. And here we are. They've gone lower.
They've gone lower. And today I sit there and say they can't go much lower. And who knows if next year we'll be sitting here and they'll be lower. But we're under 3% now. The lowest that we've had. It's starting to creep up a tiny bit, but nothing where it's shocking. Yeah. We're like at 2.59 for a 5-year fixed. A 5-year variable right now, you're 2%, 2.05. Those are going up a little bit. Or we're losing the discount on the variable a little bit. We've lost that a bit. But like you said, I have customers that I've sat with 5 years ago, 10 years ago, and they think I'm just giving them a repetitive speech where I say, try to pay this off extra because you're never going to see these rates again. And here we are as low as they've ever been in history.
I have a rental property in LaSalle that you did for me years ago. Yeah. And it's at a variable rate. It's under 2% right now.
See? Yeah.
Under 2% right now. It's just incredible. Give us the difference. What's the difference between fixed and variable rates for those who don't know? Well,
the fixed rate, the most common one is a 5-year fixed, which means your rate is not going to change for the 5 years. Yeah. We can get a 1-year fixed up to a 10-year. The 10-year is pretty high right now. Too many, you don't usually see that. But the variable product is quite popular as well. And that you can get a 5-year variable, but that rate has the ability to fluctuate. So the government meets every 6 weeks to see if they're going to change the prime rate. It hasn't changed hardly, in 3 years. I think it's changed once or twice. It's done a few drops, but nothing is guaranteed. So when the economy does start getting stronger, specifically you want to watch in the U.S. When the U.S. starts, Canada will follow. That prime, there's no limit to what it could go up. It could go up every 6 weeks for a year. It might go up once, twice. It could come back down again. So it really fluctuates. You have to be pretty comfortable and able to sleep at night, not in a position where your mortgage is too large that you can handle, that you're worried about your payment changing.
We did an interview not long ago, and they talked about the stat is if the rates were to go up, I forget the number now, 1 out of 10 people. No, it was I forget the number. I should have the number in front of me before I go on the air with it, but wouldn't be able to afford a $500 jump in mortgage rate per month.
Well, $500 a month would be a double for a lot of people. Mortgage
huge,
rates are so low. A lot of mortgages, $100,000 mortgages under $500 a month. So that would be a double payment.
I've heard in the past that the mortgage rates should be, somewhere in the 6-ish percentage range. Does that make sense to you?
Well, the government's target is actually 7.25%. That's their target of where they want to get prime back to. And that that leads back to, when September 11th happened all those years ago, because that's where it was, and it dropped dramatically, and they've had so much trouble getting it back up ever since. So that is their target. So prime today is 2.7. So to go from 2.7 to 7.25, that's a triple, right? So in the 80s, you hear a lot of people talk about, you're probably young for this, Dan, but you'll hear people talk about mortgage rates went to 18, 20%.
Yes.
That was just a double for them. So for us to actually hit 7 if it went suddenly, would be a huge payment shock for a lot of people.
It'd be a problem.
Yeah, it would. So I think that, and the government has a lot of history now on those past experiences. They're not going to let it go like that. But it could be a gradual increase when it gets strong enough. I think it was 2005 or 6, we did get up to the 6s, and then it came back down again pretty quick. So it can get up there.
In your opinion, how do mortgage rates affect the market? What do you typically see?
Well, in my first 10 or 15 years in my career, they affected it hugely. If mortgage rates went down, house prices went up pretty easily. Well, 2007, 8, and 9, when the markets were pretty poor, it didn't happen. Mortgage rates were going lower, but house prices were not going up because of all the other factors going on in the economy.
Yeah. In the market today, I know we deal with it quite a bit. You have a lot of rate shoppers, right?
Yes.
So people that don't care what the terms are, they just want the lowest rate. Yeah. What do you say to those that come to you and say, Deenie, what's the lowest rate you can get us?
Yeah. Well, there's another hour for your show.
Yeah.
Because, before it was always everybody wanted rate. The banks were all pretty competitive. Now it's not like that anymore. So the government did come to the bank a few years ago and said, okay, you guys are kind of on your own. You can change your rules like you want as far as penalties and privileges on a mortgage go. Try to be competitive, but you can go on your own and do what you want. So when someone comes to me now and says, what's your best rate? My first thing is, you should be asking me what's my best mortgage.
Yes.
Because they're not all the same anymore. Even your basic, 5 or 6 banks on the street, they're so different in the way they calculate penalties. A lot of, I don't want to mention names, but a few banks, they don't even have an escape clause. You can't even get out of your mortgage now unless you sell your house.
You're
and
kidding.
People don't know to ask that. They don't realize. They go in there and say, what's your best rate? The bank will match a rate that we can get when they never used to be able to.
Yeah. But
they're taking away a lot of other privileges that the customer doesn't know about.
Wow. Is it possible, and you have a lot of people that just go direct to their bank for a mortgage. Yeah. Is it possible to negotiate a rate with your bank?
Generally they can, as long as the bank's not starting off giving them their lowest.
Yeah. And
they typically don't do that. There's a big spread between a bank's posted rate and their discounted rate. So a posted 5-year rate today at all the banks, I think it's 4.69. But we can get 2.69, so it's 2% off. So when that person walks in the bank, if the bank's if they're a customer that has a lot of money invested, the bank might automatically give them their best.
Yeah.
But if not, they'll try a little bit higher.
Why such a big spread? Why would they advertise 4 point whatever?
Well, that's just their posted rate, right? The getting the 2.69, that's become just to be competitive. They're trying to get market share.
Jeez.
I say kids, but people nowadays, they're very competitive. Everyone's on the internet.
Yeah.
And, years ago, people walked into their bank and just took whatever the bank gave them because it was their bank. But today, it's different because, the new generation, or the whole generation, everyone's on the internet, everyone's searching. So they have to be competitive from the get-go.
And rates aren't everything, are they? So, and leading into that, we talk about rates, but essentially, there's mortgage terms that are also very important. Let's talk about that a little bit.
So the important terms, especially for people that are in their first house, because they're more likely going to sell in a few years, is their penalties.
Yeah.
So penalty calculations are very confusing. Even people that work at banks, a lot of them don't even understand.
I'm a realtor. I don't understand them.
Right? Yeah.
Really.
Yeah.
My mind is always, just call your mortgage person because I can't figure it out.
Right.
Truly.
Yeah. So the banks, there's a clause where a normal penalty is 3 months interest or interest differential, whatever is the greater of the two. Mm-hmm. The difference is the way the banks calculate interest differential. And that's something that the average consumer just doesn't understand because it's not being explained properly.
Yes.
So, that's the most important feature on a mortgage because you want, for yourself as a realtor, you want your customer, if they want to sell their house in 3 years, you want them to be able to afford to. You don't want them to have a $15,000 penalty instead of an $1,800 penalty.
No kidding. Let's talk about amortization a little bit. So back years ago, we saw was it 40-year AMs?
40, yeah.
Went down to 35, 30, and now we're at 25,
We're at 25.
max, correct?
We're at 25. Well, if the mortgage is CMHC insured, which means they have less than 20% down, the maximum is 25 years. There are some banks that will let people, if they have 20% or more down on their house, they'll let them go. Most of them are 30 years. There's a few that will do 35 as well.
Okay.
So the longer the amortization is, the smaller the customer's payment's going to be.
Yes.
So, which is meaning that's how many years it would take to pay off that mortgage.
But obviously, you're paying much more in interest, right?
Yeah,
Obviously,
a higher portion of your payment's going to be
huge.
going towards interest.
Yeah. There's also various different types of payments. So you can do a monthly payment, you can do biweekly, you can speed up the payments. Let's talk about that.
Yep. So you can do, all mortgages are registered monthly, but you have the option to accelerate them, so to pay them faster by paying them either weekly or biweekly. There's also the option to go semi-monthly. You know, some people are on pensions or get paid, the 1st and 15th of the month. You can line up your mortgage payments with your pay, but it is better to pay your mortgage accelerated weekly or biweekly.
Okay.
You take off generally about 5 years off the top by doing
Which
that.
is huge.
Yeah.
Right? Once you're approaching if you're on a 5-year fix, for example, once you're approaching your 5 years, the banks sometimes will call you and try and get you in there to,
Right.
to entice you to sign up again.
Right.
What do you recommend at that point? Should they be doing that? Should they be going, or should they be calling you and saying, "Hey, before I renew, Deenie"?
Yeah, then they can always start locking in rates 4 months before. So I will tell you that I believe it's 70% of Canadians will automatically sign their mortgage renewal without even questioning the rate. The banks know this. So a lot of the banks, even the ones that I use that give us the best rate from the beginning, at renewal time, they'll offer a higher rate because 70% of the people will just sign it and send it back, even if we're sending them letters and calling. And then the other 30, when they see, okay, they haven't sent the renewal, and the banks will call and offer them the better rates. So when your renewal's up, you need to check around. You don't just assume your banks, because they gave you the best deal 5 years ago, doesn't mean they're going to give it to you today.
If someone comes to you today and says, "Deenie, what do I do? Do I get a fixed or do I get a variable?" What are you recommending right now?
It depends on the customer. So, because variable is, it can fluctuate. We want, I have a list of who's a good variable customer and who's not. Someone that's at their maximum of what they qualify for, there's not a good variable customer because they're not going to be able to handle any fluctuations. Someone that has a smaller mortgage, maybe they can see, 10 years from now, they're going to be done. Their mortgage is getting on the smaller end. They're a great variable customer because they can handle any fluctuations, but at the same time take advantage of having a lower payment now, or not even a lower payment, having a lower rate.
Yes.
Making their payments higher and taking that 10 years down to 7 years.
Wow.
Yeah.
So it really depends on the customer.
It depends on the customer. But I'll tell you, one of the new changes, if someone is taking a variable, the banks make us qualify them as if their rate is more than double to try to protect them.
Okay. And again, that's I can see it makes that difficult, for you, but
It does.
I see why the government is doing that. It makes sense. Let's talk a little bit about transferability. So again, you mentioned if someone's looking to move on in a couple of years, in a few years, and it's funny, in our industry, in the real estate industry, we're seeing more and more of that. The generation, the 20 to 40-year-olds, they're moving every few years.
Right.
It's not like our parents where they bought a house at 18 years old and they've been there for 60 years. Yeah. We don't see that anymore. People are moving often.
They want to get bigger and bigger.
And they want to get bigger and bigger. So transferability is an important thing to consider, isn't it?
It's an important feature on a mortgage. You want a mortgage that's we call it portable, that you can move it from one house to another.
Yes.
Another key factor, though, again, that people don't realize, and this is one thing some of the banks are taking away, is you want it to be portable, but you also want to have the ability to increase and blend that mortgage when you move it. So the banks will let you port that mortgage, but only let you bring the balance. So if you need, you're generally moving up. So say if you need another $100,000, you don't want that on a second mortgage on a higher rate, or you don't want to be forced to pay your mortgage out. So you want a mortgage where you're allowed to port it, but you can increase and blend your rate as well. So that way you're not paying a penalty, you're keeping your old rate that might be better, and you're just blending the new money that you're getting.
And there's lenders that are not allowing that.
Yes.
Wow.
It's been the last few years we see that. So when someone comes to me, like your earlier question, and says, "What's your best rate?" I say, you want my best mortgage. You want an old-fashioned mortgage. an old fashioned, just where maybe like in the last 10 years, right? Not 30 years ago. So you want a mortgage that you can move, that you can increase, that you can pay out if you want, that you can refinance it early if you want. You know, some mortgages you can't even get out and refinance. So you want a nice old fashioned mortgage.
What happens if I want to slap an extra amount of, some spare change on a mortgage in the middle of my term? How does that usually work?
Well, depending on the bank, that's called your prepayment privilege.
Yep.
So, the best ones, you can prepay 20% a year, anytime in the year you want.
Yep.
The worst one would be you can pay 10% a year only once on your anniversary date. So you want the flexibility, if you have the money available, that you can put extra lump sums. You can also double payments or even increase your set payment. All those extra payments would come right off your principal and your mortgage.
Wow.
So with the best banks that we have, you generally could pay your mortgage off in about 3.5 years completely by using your prepayment privileges.
Isn't that something?
Yeah.
Wouldn't that be nice? Still waiting for that lottery win.
That's spare change.
I'm still waiting for that lottery win. I didn't win this weekend. So, okay, let's take a quick break. We have lots more to discuss here on the show. When we get back, I want to discuss refinancing a bit more in detail, okay? So, lots more to come right here on the Dan Gemus Real Estate Show. We have Deenie Stubbing, a mortgage broker with Mortgage Intelligence, in the studio. Keep it tuned right here on AM800.
Here's Dan Gemus, your host and broker-owner of the Dan Gemus Real Estate Team.
Welcome back to the show, everyone. In studio with me today is Deenie Stubbing, mortgage broker with Mortgage Intelligence. We've been covering anything and everything mortgages this hour. Now let's talk about refinancing, Deenie. Why should someone consider that?
There's generally two reasons people refinance. The first would be just because they want to get a better rate. So
Yes.
we could have someone today maybe has a year left on their mortgage. They're at, 389, which was great at the time, right? But they'll call and say, is it worth me paying a penalty today and get 259?
Yeah.
And whenever generally there's a 0.75% difference, it is. So assuming they have a bank that had a reasonable penalty, we can take them out.
I'm sure you've seen people that, signed a 10-year mortgage back 7 years ago, and they're probably somewhere.
A lot of my customers.
And they're probably somewhere up there still. I hope they've changed by now. Have you called them?
I've called them all. They were a big opportunity a few years ago.
Yeah.
But we had people we were locking into $699 on a 10-year. Everyone was jumping in and going crazy because they were going back up at the time, right? They were going to be back up to 10. So those people that we convinced to do the 10-year 7-8 years ago.
Wow.
So, we've definitely taken them out by now.
Oh my goodness.
But the other reason to refinance, the other common reason we see is for people needing to take equity of their house to pay off debt.
Yes.
So you can have, obviously credit card debt so high, 20% in general, or even credit lines. Credit lines are so hard to get rid of. So they'll say, can we refinance?
Credit lines are usually 6-7% usually.
Exactly. Yeah. Well, some, you even see some lower, but if they're $20,000-$25,000, the way they compound the interest on those, it's really hard to pay them off.
Yeah.
So you have to finally just break down and pay it off in the mortgage. And that can be done assuming someone has enough equity in their house. So that was another government change a few years ago. We used to be able to go up to 95% of someone's house value to refinance their mortgage or all their debt. Yeah. Now we're cut back to 80. So for the last few years, we haven't been doing a lot of refinances because house values had dropped in Windsor.
Yeah.
Now that they're going up, there's a nice spread. So we're seeing more refinances where people can fix up their house before they sell them or do additions or just pay off car loans, things like that.
Any tips? We've got 2.5 minutes left for anyone who's had credit issues or who's right there. They just need, a bit more points on their score. Yeah. What can they do to kind of...
Well, the biggest piece of advice I have is stop listening to people that you work with and on the street about how to fix your credit.
Yeah.
Come and talk to someone like myself that is professional and knows, because we see someone come in and their credit is just wrecked because, the guy that works next to them gave them bad advice. So that is seriously most common. But important for your credit, you always want to have at least 2 pieces of credit. Some people will close everything thinking that we have too much credit. We close it, then you hurt yourself. So you want to have at least 2 pieces of credit. You always want to try to keep your balances under 80% of your credit limit. So the closer you get to being at your limit or even going over your limit, you can drop your score 100 points. So you want to keep under your limit, and then of course paying on time.
Is it bad that, and again, I've heard this on the street, is it bad to have a credit card with zero limit, dollar, like zero balance on it?
No, as long as it's an active revolving card.
Okay.
So it's perfect to have the perfect scores that I see. People will have 2 or 3 credit cards available to them, but they have zero balances.
Okay.
So as long as your credit line or your credit card is open and you're able to use it, it's
Yep.
going to report on your bureau.
Okay.
Yeah.
Last but not least, mortgage life insurance. Is it a good thing to do or is it not?
Mortgage life insurance is a good thing to do, especially if the customer doesn't have any other insurances in place.
Yeah.
So mortgage life insurance, depending on your mortgage amount or your age, I have some customers that cost them $8 or $10 a month. So, you just never know what can happen. Sometimes someone can have too much insurance where they have, policies at work and a couple personal policies.
Yeah.
Well, you don't need a small one, an extra one for your mortgage. But if you have nothing, it's pretty inexpensive.
Listen, this hour has flown by. We're going to have to do this on a regular basis because we've got lots of questions to get to and we're out of time. Yeah. So unless I take Kara's hour Sunday morning live, she might not, she'll be happy. Maybe she can sleep in. How do people get a hold of you if they have questions?
If they'd like to call me, my office number is 519-250-4966.
Okay.
Or they can go on my website. My email is there as well, which is deniestubbing.ca.
And all her information is on our website as well. You can find it at dangemus.com and go to the People We Trust section. Jeannie's info is all there. Thank you for coming in this morning.
Thanks for having me, Dan.
Back to bed you go.
Yes.
All right, we're back right after this.
Knowing what Gemus.
Well, there you have it. Another Sunday down. It was great to have you along with us today on the Dan Gemus Real Estate Show. Lots of cool stuff coming up next week. We'll get back to our question of the week segment. If you have any questions, real estate questions, mortgage, legal, home inspections, anything about the real estate transaction, email them our way, dan@dangemus.com. Don't forget, you can find all of the shows, all the past shows on our website, the audio along with the video. We have cameras in studio with us, unfortunately. So we have to wear. Deenie laughed as she replied to the email yesterday. She says, "Okay, I'll be there in my pajamas. Don't mind." I said, "Oh, don't. FYI, we have cameras." Oh, okay. So you're looking all dapper today. Yeah. Yes, you can find all that stuff on our website. We have the radio show section there on the website, dangemus.com. And don't forget, if you are thinking of selling, the Dan Gemus team would love to help. We'll come out there and get you a home evaluation. Absolutely no obligation, no charge. Give us a call, 519-566-5565. Again, 519-566-5565. And all our info on our website, once again, dan@dangemus.com. That Gemus is G as in George, E, M as in Mary, U-S. Okay? There you have it. We'll see you again next week. Thanks for listening, and have a great rest of your weekend.